Hello everyone and welcome back to another episode of Markets in Turdmoil. Although markets really aren't in a turmoil right now, as we're a little bit under 1% from all-time highs as of Friday's close. I do have to say last week markets did give a slight turd in the moil, or so to speak, as we did have quite a wild session on Monday as we opened high and dropped straight down, as well as quite a wild swing on Friday. Where we managed to close a little bit higher, back above the range. Now, this video is going to be less of a preview and more of a review, as basically last week's movement hasn't invalidated my video from last week. So my video from last week was basically more short to mid-term bullish movement, so basically higher price target for the SPY, and I still believe we're going to hit 374 sometime in the near future. So in this video, I'm just going to go over the same metrics, and we're just going to have a small review of the indicators that I look at and basically what happened last week, both on the daily and hourly chart. First, we have the daily chart here, basically looking at the classic 20-day SMA and the 14-day VWAP here. As we can see on Friday, we actually traded below the 14-day VWAP, but above the 20-day SMA. Now, by the end of the day, we actually rallied back above the VWAP, which is pretty bullish, as we sort of held those spots, as you can see here on Friday and here on Monday and the previous Friday before that. And also basically any dips we've had along the way in the past few weeks, we've always held this 14-day VWAP, which is considered pretty bullish at this point. Now, looking at the drawings here, we did sort of test, as you can see here, this electric red line here, this really thick trend line. We tested that. We managed to hold it, although it wasn't really a close test. We were pretty close to it. We held it and we bounced back up above it. And with this whole Fibonacci extension, we held the previous so-called highs that we gapped up here, and this area that we tested once already last week, and we closed above that. Now, looking at the stochastic RSI and the RSI here, as I said last week, we were pretty low on the RSI, although we went one tick lower on Monday, but managed to close or trade higher during the week, back above the 80s, and also revert back down. Now, this is actually pretty good, as we left the sort of overbought territory here and are back in the sort of closing to a oversold zone, so that gives an opportunity to move back up. As well, here in the stochastic RSI, we did curl and cross back up, so this is sort of a bullish indicator here, where the fast stochastic RSI crosses above the slower moving line here, and without crossing back under here, so that's also pretty bullish sentiment. Now, looking at the hourly chart, we can see the actual pretty wild movement we've had on Friday, where we basically sold off for practically the entire day and then had a little bit retest here. We were basically trading under the VWAP, the 14-hour VWAP in this case, for basically the entire day. We had a few tests here, and then we sort of hit the bottoms here, which is at the bottom end of the Bollinger Bands. And then basically at the end of the day, I'll show you on a smaller time frame. So on this 15-minute time frame, you can see that at the end of the day, basically the last 30 minutes, we touched the bottoms, lows of the day here, and then completely just rocketed up into 369 here and closing around this area. Now, you can see this effect also happening on Tesla at the end of the day. So that's the point I'm going to be talking about later, specifically with Tesla's inclusion into the S&P 500. And the trades that were made at the end of day on Friday. Now, back on the hourly chart, as we can see here, we did test the range of this box here, this trading range, on Monday when we gapped up and then traded lower, but we bounced above it. We held this spot on Monday and we bounced above it, headed higher, and then came back down lower. Now, remember that this is a higher low, and this also doesn't invalidate my earlier medium-term price target of 374. So which basically means that as long as we trade above this box, that still remains valid. In any case, if we do go venture back into this box and close below this line, then my thesis would then have to change. So back here, there's basically two things I want to talk about for the markets, aside from the charts. One of them being the stimulus package that Congress will be passing, or is rumored to pass pretty soon. It has been confirmed by the Senate Majority Leader, and that would be estimated at a $900 billion package, as well as within that package, $600 to every American. With that news, this news has basically been on the docket for past few weeks now, and everybody's been expecting it. So I would say that there is a risk of selling the news when this event does happen. So that actually might be a bearish move coming in the near future, a bearish catalyst. Where basically the news is confirmed and there is no more wishful thinking. The second thing I want to talk about is, of course, Tesla's inclusion in the S&P 500, which is happening on Monday. So at the end of the day on Friday, we basically saw huge trades made at our market close and after close. Basically, from what I saw, 2 blocks of 69 million shares, so that's around 130 million shares, and you can do the math on that and how much dollar value that is. So those trades were basically for index managers to add Tesla to their S&P 500 indexes. So basically, starting Monday, the S&P 500 and SPY will have some more correlation with Tesla, and the movement of Tesla will drive it. So as we all know, that Tesla is pretty pumped up right now, so it might be a drag on the S&P if it ever corrects. So that's also one thing to watch out for. Now with that said, it is the holiday week, so there shouldn't be too much movement this week. So as always, stay safe out there and happy holidays.